Hi, I'm David Berney, and thank you for joining another episode of Financial Markets Insights. If you're sitting in the US or Asia, you're probably more likely to have heard of sterling trading tech than if you're sitting in Europe. But today I'm delighted to have Jen Nayar, President and CEO, on the call with us. And we're going to talk about what sterling are seeing in the markets and what they might focus on next. So, hi, Jen. Nice to see you again.
Good morning, David. Nice to be here.
So, Jen, can you start by telling our listeners a bit about sterling? I mean, I know there's a product suite. I think of risk and margin and an OMS, or am I missing some bits?
That is correct, and you are missing some bits. So, Sterling Trading Tech, we're New York based or Chicago based. We're an independent technology provider to the financial services market. So, you're absolutely right. We do provide risk and margin systems. We have an OMS, but we also have a trading platform business. So, that's really where Sterling grew up from, was in the trading platform business. And then in more recent years, we moved over to build out our risk and margin and our OMS system.
Cool. So, unusually, Jen, my prejudice perhaps, you've gone US first and Asia second. We generally think in this time zone that US people come here because we all speak the same language. Tell us about how you ended up in Asia.
So it really is a factor of where the company grew up from. So I've been in the seat for 2 years. Prior to that, the trading platform business really was adopted early on, and say early on, that was something like 15 years ago now, for a lot of retail traders and particularly in Asia, some Asian prop trading firms. So it was really client driven that led Sterling over to Asia, and then, probably no surprise, I'm now sort of got my line of sight on Europe and looking to see where we can bring our technology over what I would describe as the right side of the pond.
So, being as this is actually your birthplace in London, for anyone who can't spot the London accent, you're coming to this time zone with what and when? 2025 or after that?
Yes, I think so. I think the last 2 years we've really spent building out the capabilities in the risk and margin and OMS system. And I really do think that, in particular, from the risk system, I think that that's what we do particularly well. And it's extensible to other markets, or easily extensible to other markets. So I'm not a big fan of, if we build it, they will come. So I think the plan for me is to do some recon in 2025, talk to some of the people that I know, obviously in the markets over there, and really just get an understanding of what issues and challenges that they're faced with, where they think that we could step in and help solve for some of those issues.
So, let's talk about the trends you are seeing. Technology trends, what's going on there?
Yeah, I think there's you and I have both worked in financial services for most of our careers, and there's no shortages of challenges in terms of competition. That continues to magnify the importance to me for speed and innovation, right? So the technology in our market just doesn't stand still. One of the recent trends that we've been seeing this past year is the uptick in traded options. That's looking like it's going to continue. There's been other venues coming online more recently supporting options, IEX on this side of the pond being one of them. And, from a technology standpoint, that then starts to highlight capacity and throughput issues. So that's one of the things that we've been very focused on at Sterling, is making sure that we stay one step ahead of that, making sure that, we can continue to tune the system for performance and capacity. I think one of the other things that we've seen more recently is a renewed interest from Asia. So, as I mentioned earlier, the trading platform has had a strong supportive following from the retail space in Asia. More recently, we've seen a lot more larger institutions looking to get into the US market. So, trading in US equities and options. So, we're seeing demand coming from, Singapore, Hong Kong, but more recently, a big uptick from Taiwan, Korea, some of those other regions. And then I think India, Dubai, South America, there are other markets that look to be showing interest too.
It's interesting then. If you're going to go and do some more in the traded options world and IEX are coming, is Michael Lewis writing a book on you next week?
Yeah, maybe.
Be good for public image anyway. So, in the world of trading technology, we all know that, speed and volume and geography are all coming. The other thing that's really coming is asset class mixes.
Yes.
And is that working in your world as well?
Yes, it is. Yeah. So I think twofold really. One is that we are a B2B to C model. And I think we've all seen that the retail space has become more sophisticated. So, the retail investor now looking to get into derivatives as an example. So, certainly on the trading platform, that mix of asset classes, that demand continues to be there. The risk system is really where we are moving at a fair clip to add asset classes. Fixed income has been subject to more electronification. With that brings more regulatory scrutiny. So, certainly fixed income, mutual funds, the bond market. So, yes, the mix of asset classes continues to create challenges for our clients and obviously problems for us to solve.
I mean, it's a never-ending shift towards more, but the thing that also brings is compliance upticks because suddenly everybody's got to have more eyes on more balls, right? How's that come in your world? How's that affect you?
So it affects our clients, right? We've seen a lot over the years, when I think about sort of front office trading platform, I think that financial services markets has always been on a path for sort of continuous technology evolution, right? And then as we see some of these asset classes come on and the compliance and regulation around it, it starts to shine a light on some of the legacy systems in the middle to back office. And so that's really where I think that we're starting to see some of our clients are challenged with the disparate systems that they've had managing equities in one place, fixed income in another. And so bringing those things together to form a holistic view of the company's risk profile has certainly been a challenge. And so that's really been a great opportunity for us on the risk system to be able to consolidate all of those policies into one place and be able to provide a real-time view of what the company risk profile is. And I think the other thing is that from a technology standpoint, we're in the world now of leveraging APIs, right? And so an API is easily extensible to other asset classes.
So global trading, you're already there. Asset class improvement, you're already there. Where are we going next? As long as I've been around, someone's been talking about we're either doing longer trading hours or shorter trading hours. Some people say 24 hours.
Yeah. And so that's the challenge with being a technology vendor, right? So we have to service all and sundry. So, yes, 24-hour trading. Obviously, Blue Ocean has been the trailblazer there. We have set our systems up to support that. Now we're seeing other venues coming online. New York Stock Exchange recently saying that they're going to go, I think, 24 by 5 or 22 by 5. If I had one ask for changing trading hours, and it would be that everybody aligns on what those hours are, because from a technology standpoint, it then begs the question, what's the start and end of the trading day, right? And so, as you know, a lot of these systems start the day with the start of day file and end the day with the end of day file, so everybody knows where they ended up and where they're starting the next morning. And so that's a complication that a lot of our clients are going to start to see as each venue comes online with slightly different idea of what the 24-hour trading day actually looks like. So we have to keep pace with that. We have to keep pace with, as I said, the additional asset classes. So we're not quite there yet. We're bringing on fixed income. We'll have mutual funds launched by the end of the year. And this is really just client driven. This is where the clients are taking us. And then we're pretty excited to move into futures. That's a new foray for us next year. And then, as I don't know if you noticed, but we had an election recently. And so, that is undoubtedly going to change regulation again. It's going to, create another sort of wave of changes that our clients are going to have to keep up with. So, of course, we have to be out in front there too. And, the markets have responded well to the news. Crypto seems to be back up on its feet again. So yeah, lots of changes coming in 2025, and some of that still TBD, depending on the new administration here in the US.
You work in a highly commoditized and competitive space. Your clients do. Everything's expanding asset class wise. It frankly looks like you've got to run pretty fast just to stand still in this world.
Correct. Correct. Yeah. If I sound a little bit tired, it's probably because I am. But again, we are a pretty nimble firm, right? So we have a really nice engagement model, client engagement model, right? So we stay close to the clients, we stay close to the markets. And yes, to your point, we are always having to run fast just to keep up. We'll be publishing our product roadmap probably within the next few weeks. And I can guarantee that we will have to pivot from that some point in 2025 because of all the reasons that we just talked about, right? So it is a fast paced environment, and our focus has to always be on ensuring that our clients can reduce their cost and maximize their profit, which sounds really easy to say. There's a lot of work that goes behind the scenes to make sure that we can deliver on that promise.
Actually, I do remember you saying something that made me laugh because I actually hadn't thought about it in a technology vendor perspective about commodity trading and how you have to be pretty flexible because just recently the oil price went negative.
Yes.
Some people didn't actually have that in their systems.
That's right. We managed through that, I would say more by luck than judgment because we didn't see it coming. But again, we do have to be out in front. And so we talk about trends in the marketplace, that I get asked that question a lot. From a technology vendor perspective, when you think about a trend, you're looking in the rearview mirror, right? We have to be looking forward constantly and trying to assess the likely impact to the markets and what that's going to do for the underlying technology. The election, again, I almost hate to bring it up again, but the election we know creates volatility, good, bad, or indifferent. It's going to create a lot of volatility. So, the teams have to make sure that we're tuned, we're ready for record spikes, which, we were, and we handled that, without any drama, which is always nice.
So, you've had elections, we've had elections, we've had a nice, interesting budget as well. The whole world is definitely keeping all of us on our toes. And let me ask the question the other way. Who, when you come to Europe, is your ideal customer? Who would you want to be going to see?
So I think our ideal customer, that's a tough one, right? Because I don't want to put myself in a pigeonhole here, but I think that our ideal customer, I think, particularly on the risk system, I keep talking about the risk system because I'm just overly impressed with our ability there to handle some of these complex problems. So I'll just take a quick step back. Every firm has a different appetite for risk, and every firm has multiple policies. Each policy is relevant for each asset class. And so our ideal customer is somebody that's really challenged with consolidating all of that and being able to know at any point in the trading day what their risk exposure is, what their margin requirements are. And so I think any client that is still challenged with trying to stitch together legacy systems, that's trying to expand their asset class and bring all of that into one place so that they can really have the confidence of knowing exactly where they are at any point in time. That's our ideal client. We have the ability to take your custom house policies around risk and marry that with our technology. And that sounds very simple. It's a very complex problem to solve, and it happens to be one that I think we solve very well.
Almost every firm, however much they'd admit it in public, has got a concern of their own about what their real risk position is.
Yeah, I agree. And I think a lot of firms that are in that position are one large fine or problem trade away. So, being able to understand just exactly where they stand and ensuring that they are on the right side of the regulation, I think is critical.
I mean, they've got not just the risk, to use the word in a different way, but of something going wrong, something coming to bite them, but the reputational risk of getting this wrong. And that is almost firm defining in our times.
Yeah.
That's the problem. So risk is definitely going to be something we see you walking up and down the streets of the city and probably the European capitals talking about. What else should we look at? Trading system? What's the next thing after the risk system?
Yeah, so again, and from a trading platform perspective, we are looking at now adding additional markets to that. Obviously, being driven largely by the Asian markets at the moment, and adding futures, which I think I mentioned earlier. We also are about to launch a new technology. I mentioned about trading platforms going really from sort of desktop to web to mobile. So we're bringing out a new web and mobile product, which will be launching early in the new year. So we're quite excited by that. And then our OMS, we've been very focused on US equities and options. We are adding futures to that. And again, always open to a conversation for somebody looking for a high performance OMS. So I've been favoring risk because it's been top of mind, particularly given some of the challenges we've seen in the last couple of weeks. But yeah, we are adding additional asset classes across the product suite.
Never wrong to be in the market with something that's got a regulatory tailwind, I think.
Yeah, it has a tendency to focus the mind.
It does indeed. So we touched upon this, but competition intensifiers. What differentiates Sterling from other people in assisting clients with profitability and market performance?
So I think there's a couple of things that I've probably already mentioned. I think one is our responsiveness to clients, right? Everything that we do is driven by our clients' requirements, and we stay close to them. We understand what their strategy is. I like to think, are very responsive. Some of the other vendors in the space are much larger firms, and that has a tendency to slow things down. And I think that, our pace of innovation and our pace of adding new features and functions in response to client demands does set us apart from our competition. And again, as I said, we're always looking forward towards what can we do better, what issues or risks are coming down the pipe that we can get out in front of. And then above all else, I think we remain competitive on pricing. That's another thing. We are a smaller independent firm, and I think that we are very flexible with our commercial model as well.
So, Jen, let's touch on one of those topics that comes up in every one of these meetings. What are you doing in the world of AI?
Well, obviously very topical at the moment. AI definitely has a role to play for sure. I think for us as a technology company, the way we're looking at AI is how can it drive efficiencies for us? How can we leverage AI to standardize processes? Can we adopt AI in terms of running development scripts, QA scripts, etc.? So I do think that there's a home for AI for sure, particularly in technology firms, but still early days for us, but interesting nonetheless.
It's been a real pleasure, Jen. I look forward to seeing you when you come to London.
Absolutely.
And for all our listeners, thank you for listening. And our thanks to Jen Nayar, President and CEO of Sterling Trading Tech.
Thank you, David.